Hey, in this video, I'll talk about the types types of VAT or sales tax as some jurisdiction for it. So, what are these two types? Okay. Number one, number one is the input VAT, and number two is the output VAT. Right. So, let's start with the input VAT. This one we're talking of the manufacturer. Okay, so what is this? Okay, so for the input VAT, um, this is the VAT you pay on your input or purchases. Okay. Um, let's go to the example of manufacturing pencils. Okay, so I bought raw materials like let's see, wood, or is it lead? Okay, so all this wood or whatever materials they used. So on this wood, when I purchased, I paid, let's assume there's 10%, 10% VAT. Okay, so as a manufacturer, I have to buy materials for me to manufacture pencils, right? So these materials are wood and lead. So on these materials, I paid 10% VAT for each of these what? For each of these um, materials. So this is the input VAT. Okay, it's the VAT you pay on your when you're purchasing your inputs. Let's say raw materials, or you used a consultant. Okay, so that consultant charged you VAT as well, right? So, so input VAT as a manufacturer, this is um, the VAT you pay on your raw materials. Okay. Now the output VAT, um, okay, the same as the same manufacturer. It is the VAT. Okay. So we're saying this is the VAT. Yeah. So this is the VAT you pay you pay on your here you say on your input or purchases. So this is the VAT you charge your customers. Okay? For instance, having manufactured the pesos, I've manufactured the pesos um, at a cost of, let's say, at a cost of 80, and I've also added $20 or $20,000 as my profit. So I'll charge VAT 10%, 10%, VAT 10% to my customers. So that VAT you charge your customer, that VAT you charge your customer is what you call what? Output VAT. So what happens at the end of the end of a period, let's say a month, at the end of the month, you need to do a reconciliation. Okay, so you need to do a reconciliation. Spelling reconciliation. Okay, so what is this reconciliation about? Okay, the reconciliation is you need to know, let's say you have input VAT of let's say 20,000, output VAT of say 25,000. Okay, so what will happen? If you have paid on those goods you are passing on to your customers, you have paid VAT of 20,000, and at the same time, the output VAT, you have charged your customers 25,000. So what will happen to the difference? Okay, what will happen to the difference? Ideally, the difference is supposed to be zero. But since there is a difference of 5,000, it means you have collected more VAT from your customers than what you have paid your what? On your purchases or your suppliers in your value chain. All right. So this VAT will go to IRA, or in our case, into Malawi Revenue Authority. Okay. So you summarize all the tax you have paid when you're purchasing your materials as a manufacturer. Then you also add all the tax you have charged your customers, your pencil customers. So at the end of the day, what you have paid on your materials should be equal to what you have charged your customers. If there is a difference, it means that difference, that VAT difference is the one you pay what? You pay your tax collecting body. Right. So let me stop there. Thank you.